Consider how financial services are now offered and sold. When you go to a bank or a service lender, you must follow the regulation and rates, which are frequently unclear. Yet, we must believe these financial institutions and their policies because they control all your assets. This trust is easy and crucial to have in certain countries, but not others, where there is excessive inflation, corruption, and a dominant financial infrastructure. People frequently want a safe and stable environment where they can store their assets, borrow money, and even make long-term investments in these markets. Enter DeFi, which essentially allows financial services to function in a completely open, global, publicly accessible, and transparent digital form, as a digital smart contract stored on a transparent and secure blockchain according to a specific set of rules. But why should you care about DeFi if you have no intention of holding Bitcoin? Because it has the potential to alter the future of financial services. That is why, here in Crypto Assets, we prepare this video to teach you better what this up-and-coming segment in the world of cryptos is all about. In this video, you will explore the decentralized finance, DeFi, world and discover how can anyone make money and how to get the most out of your investments. So make sure you keep watching until the end of this video. To be the first to get these updates, remember to like, subscribe, and hit the notification bell to get the latest crypto news, guides, and updates. Now, let's begin. First, what is DeFi? DeFi stands for Decentralized Finance, meaning financial services are provided on a blockchain rather than through a brokerage or a bank. Financial institutions operate as gatekeepers for any transaction in today's financial environment. This grants them control over your assets. Decentralized finances are services that are not controlled by a central authority. They enable peer-to-peer Bitcoin transactions without the use of a middleman. It is a combination of traditional banking services and blockchain technology. DeFi is taking traditional financial system parts and replacing middlemen with smart contracts. This means that DeFi requires decentralized infrastructure, such as the blockchain, to function. Although a small number of these DeFi protocols have migrated to rival blockchains due to the differences in transaction speed and gas prices, about 96% of these DeFi protocols run on Ethereum. Because the user does not need to move their assets to exchange, blockchain and smart contract replace the traditional overseas of such transactions, like banks, shareholders, and government organizations. Decentralized exchanges lower the possibility of fraud, and this system is considered safer because there is no security breach. Furthermore, certain DeFi initiatives incorporate KYC, Know Your Customer, requirements for all transactions, which might prevent price manipulation or phony trading wallets. DeFi can benefit its investors since fresh ideas and concepts are created regularly. DeFi, for example, is taking Web3 by storm by providing innovative approaches to double or triple your assets. But how can anyone make money with DeFi? Anyone may use DeFi to invest, lend, and borrow, just like they would with fiat money, while creating new job possibilities. This section will go through these options and strategies to increase your passive income. In 2022, DeFi is one of the best ways to make passive income, and here are 4 ways to profit from DeFi platforms. Number 1. Staking tokens on DeFi project is like having a savings account in your bank. You stake a particular quantity of coins for some time and get coins as a reward. The blockchain provides these benefits, which validate transactions using your staked coins. In addition, by staking more tokens, you can receive more significant rewards. Some cryptocurrencies, such as ETH, have a staking minimum. However, some crypto exchanges also offer staking protocols that let you invest with lower deposits. Number 2. To offer liquidity, similar to staking, you invest tokens in a liquidity pool and receive liquidity pool currency in exchange for enabling token trades. The larger the number of tokens you provide, the greater your rewards. Number 3. Lending money is the simplest method to get passive income using DeFi. DeFi lending is distinct because the assets are blocked inside a smart contract that picks a borrower for you. You can access your assets and profits when they repay the loan with interest. Number 4. Yield farming uses the tokens you earn as a liquidity provider on a yield farm. A yield farm operates similarly to a smart contract in that you may earn more of the same token over time if you stake your tokens on the platform. To go into more details, yield farms are lending platforms that leverage your token to lend to borrowers. In exchange, you receive rewards in the form of similar or different tokens. Yield farming is comparable to time deposits for traditional fiat money, except there can be big profits in yield farming, but only if you're ready to take high risks. Now, let's see the difference between DeFi and traditional finance. One of the best ways to see the potential of DeFi is to understand the problems that exist today. Some people cannot open a bank account or use financial services. Lack of access to financial services can prevent people from becoming employable. Financial services can prevent you from getting paid. A hidden charge for financial services is your personal data. Governments and centralized institutions can close market anytime they want. Trading hours are usually limited to the business hours of a specific time zone. Money transfers can take days due to the internal human processes, and the intermediately institutions need their cut. So, how to get the most out of your DeFi investments? Liquidity mining, staking, and yield farming are all great ways to put your digital assets to use. While these tactics are risky, don't let them discourage you. Liquidity is essential in DeFi, and companies continue to give generous rewards to users that contribute liquidity. Getting in early is critical to expanding your investment pie, leading to more investment options and higher yield later on. So, there you have it, everyone. If you have enjoyed watching, don't forget to like and subscribe to be the first to watch the following videos and more about crypto, Web3, and NFT guides and news. Thanks for watching.